Welcome back to the channel. So I know it's been a really rough month for Skillz since the release of the second quarter earnings. Skillz has been going downhill from $15 to almost $10 in less than a month. It's super obvious that Skillz is not well liked at all by the Wall Street, but I'm telling you, if you have the time and patience, you have to consider Skillz because there's no doubting that Skillz is a massive bargain at $10.50 considering with what they have ongoing right now. But more on that later. In the meantime, I really want to share with you guys quickly on the good and the bad problem with the Q2 earning first. Skillz revenue grew to $89.5 million in this quarter, up by 52% year over year, beating analysts' expectation of $88.2 million, marking Skillz' 22nd consecutive quarter of growth. It shows that they are still growing at a very consistent rate, super important for growth stocks in general. As for the costs and expenses, this is where most analysts are not having it. Sales and marketing has almost doubled to $99.5 million. As a result, net losses have shot up massively to $79.5 million. That's almost $60 million losses year over year and $26 million losses compared to the previous quarter. Now, I've said this many times, in general, it's okay to see growth stocks with increased losses. But the problem is this. When there's an increase in sales and marketing, we should really expect an increase in monthly active user and paying monthly active user as well, right? But this is where the problem is very evident. Monthly active user fell from 2.7 million last quarter to 2.4 million, while the paying monthly active users fell from 467,000 in Q1 to 463,000 this quarter. That explains why Skillz is on a downtrend. Aside from that, gross margin is still very consistent at 95% compared to the previous quarter and still remains one of the highest compared to any other company out there. Revenue guidance increased, which means that they are still very optimistic for the upcoming quarters. Cash on hand, Skillz has $692.8 million compared to $615 million in Q1, and it seems that a large part of it was raised from warrants. So the way I see it, obviously I can say Skillz has a very good earning quarter with the increasing net losses and stagnant monthly active users. But despite all of these short-term noises, I'm not even close to thinking of selling Skillz just yet, as they have made some key execution in this quarter, which in my opinion is more important for a growth stock. I think it's important to note two things. First of all, Skillz has made some remarkable moves, forming a strategic alliance with Exit Games, investing $50 million for a minority stake in the business. Essentially, Exit Game is a synchronous multiplayer gaming technology which allows developers to create and host real-time multiplayer games where players compete with each other in real time. Its client includes some of the world's leading publishers, including Square Enix, EA, and Ubisoft, among others. Now, we all know one of the major doubts that people have with Skillz is their over-reliance on its top 3 games that accounts for 90% of the company's revenue, leading to an eventual slowdown in revenue and paying monthly active users. So this is really important for Skillz to make their major leap away from social games like Solitaire, Bingo, and 21 Blitz, accelerating towards a wider range of monthly active users. Hence, I expect Exit Games to play a key role to speed up Skillz' vision to support multiplayer synchronous content on their platform by unlocking popular racing, fighting, and first-person shooter games like PUBG, Fortnite, and Call of Duty. Second of all, from the marketing and advertising perspective, Skillz has acquired mobile advertising technology firm Ark that provides Skillz access to an audience of more than 465 million monthly consumers to mitigate Skillz' high marketing related expenses. Ark basically leveraged machine learning and big data to optimize mobile advertising campaigns to help provide more effective impressions and end consumption of the mobile video game apps. This means that it can better serve game developers by improving its user acquisition process and distribute their content better. After all, investing more money on marketing than you earn in revenue is not a viable growth strategy. So this should lower Skillz' user acquisition costs and boost the monetization of existing monthly active users as well. Overall, I really don't think Skillz is as bad as people are making out of it. Yes, Skillz remains unprofitable, but looking from the business perspective, this company clearly needs time to create shareholders' value. I believe the key to it lies in their strategy and execution. As long as they can continue to make the right move, which is what we are already witnessing right now in the Q2, like acquiring Ark to tackle the net losses problem, accelerating to real-time multiplayer games through Exit Games, NFL kickoff in 2022, and soon to be launched gaming platform in India, I have no doubt that this sleeping giant is ready to bounce hard to the $30 level over time. Well, that's all I have for this video. Don't forget to hit the thumbs up button and subscribe to the channel for more stock updates like this. Also comment down below, I'll be really interested to hear your thoughts on Skillz. Till next time.